Order, order. Thank you very much, all three of you, for coming to give evidence this morning, and thank you in particular to a former colleague of ours for coming. It's very good to see you again, and it's always good news to discover that promotion is possible from this committee into the ranks
Point of order was
of government. I felt that to describe it as a promotion would be the right thing to do in the search. But in time, Andrea, you'll be able to tell us whether you think it is indeed a promotion. Can I begin by asking you whether you have found that your enthusiasm for competition in financial services, which was very much in evidence when you were with us, has in any way been dampened now that you're in the executive?
Well, thank you, Mr. Chairman, for inviting me here today. And the first thing I would like to say is I'm very much missing the Select Committee. So I'm delighted to be back, even though not in my usual place, which is now taken over by Mr. Baker, very admirably. And the second thing I wanted to say is that the 4 years on the Treasury Select Committee is the most astonishing preparation for ministerial office in the Treasury. And then the last thing I want to say is also, on arriving in this new role, where, as you know, I've been for just over 2 months, it is incredibly impressive to see the influence that the Treasury Committee and others have had on the way that thinking has developed in the Treasury. So my early observation is that the system works, that the Treasury Committee does a fantastic job. So if I can flatter you without sort of at all hinting that I might want you to be kind to me in the questioning, then I'll do so. But specifically in answer to your question, no, my enthusiasm for competition is stronger than ever. And I certainly think that the influence of this committee on the competition agenda has been felt, and there are a number of measures that the government has taken which I'm not sure to what extent they've been fully explained to the public as a whole, but not only competition but also transparency to try and promote greater competition have been two features of what I've seen on arriving in office, and I'm happy to expand on that if you'd like me to.
Why don't you say just a few more words on that, since you've obviously given some thought to that point before you arrived.
Yeah, well, specifically on transparency, which is so important. As we know, we've got 80% of all SME lending is done by the big four banks. The Herfindahl Index of Concentration suggests that that the BBA's latest estimate is that that SME lending is just over 2,000, which is extremely concentrated, versus other measures on, for example, credit cards at just the concentrated level. So SME lending is a particular problem, and obviously we can't suddenly magic a whole bunch of new challenger banks overnight, although good progress is being made. So what the government has been doing is looking at measures to improve the data sharing. So, for example, in the Small Business Bill last week, we have announced that that credit histories will be required to be made available through credit ratings agencies, so that challenger banks, with permission, will be able to look for new opportunities for lending. For example, we're also consulting on requiring the big banks to make referrals, so where they don't make a loan, where they will be required to refer to challenger banks to give them the opportunity. We've also got the postcode lending data, which requires the big banks to look at to demonstrate by postcode where they are lending, so that challengers can see where the gaps are. And then another new initiative which I launched just a couple of weeks ago is the Business Banking Insight, which is a quarterly survey of a random group of SMEs that will rate them according to service, availability of funding, terms and conditions in all different categories. So it's, if you like, an SME-led insight which enables, first of all, banks to look at themselves and areas they can improve on, but also for challengers to see what they could do, where the gaps are and so on. So all of those things I think are really important in improving the competitive outlook.
Do you feel overall that the regulators have done enough to push forward the competition objectives that we gave them, which you were a great enthusiast for, indeed were instrumental in, for example, getting further action on the statutory objectives of the PRA?
That's a really difficult question to answer. I think regulation has been a bit of a moving feast, as we know, since 2010, where we completely changed all the regulation, and things have moved on. As you've just heard, the Financial Ombudsman Service is now looking at whether it should go up the scale.
Why don't I put the question slightly differently and in an easier form, and just say, are you able to give us a commitment you're going to help us hold the their feet to the fire in making sure they do this, making sure they implement this and make it effective?
Yes, absolutely. And I certainly think one area where there's been enormous improvement is in the provisional authorisations for new banks. So as we know, I think we were all quite taken aback in 2010 when we discovered that Metro Bank was the first new full-service banking licence in 100 years. Well, now, of course, the PRA is in talks with over 25 new banking applicants, and they've had something like 47 pre-banking authorisation discussions. So that's a raft of difference. But yes, I can certainly
someone in the
give you
Treasury
that
is keeping an eye on making sure that the another logjam doesn't develop, and to make sure there are no catch-22s in the system.
Absolutely, yes.
One last question before I pass the question on to Jessie Norman. There's quite a lot of unregulated lending, not by volume, but by type, developing in the market. How much unregulated lending do you think we can accept?
I think that the particularly new diverse sources of finance, such as peer-to-peer and crowdfunding, those new markets, and peer-to-peer we already know is being brought under a regulated environment, and crowdfunding is being considered for that and consulted on. So I think where new and completely diverse sources of funding are emerging, it's important that we stay on top of it and have a close look at it and make sure that it doesn't become a dangerous, either a systemic or indeed a mis-selling risk. So I think it's important that we stay on top of things as they change. However, of course, there is this sort of fundamental principle that business lending itself isn't regulated. It's provided normally by regulated entities, but business loans themselves have not traditionally been regulated. And I think, according to the industry, there isn't an appetite for general business lending to come under regulation. Do you want to add anything to that, Ms. Cottrell?
No, I think that in substance that's absolutely right. And I think one of the balances that we always have to strike is when you get the innovative sources of lending and other sources of funding developing, at a point you do get a demand from those firms for regulation, generally because it helps them reputationally, it makes sure that everyone in the market is behaving well on a level playing field. But what we have to be very careful about and work very closely with the regulators on is to ensure that that regulation, when it's brought in, is proportionate, so that it doesn't just protect the incumbents and keeps other new entrants out. And that's what we've seen, as the Minister's referred to there, with respect to peer-to-peer and crowdfunding.
Okay. Jessie Norman.
I must say that last sentence is one I would not have expected a Treasury official to say. I'm very pleased to hear you say that. Proportionate.
Absolutely.
Keep barriers to entry low, encouraging competition. That seems thoroughly good. Minister, may I say we have gained a son, but we also lost a daughter, and we're very much missing her. And may I also say how thrilled I am that your translation to the Treasury hasn't affected your trenchantcy of language at all. The committee always, as you appreciate more than anyone, enjoys crisp answers. In that spirit, I take it you still...
And question.
Thank you for that, Chairman. I look forward to your interventions on my questions. Minister, could you just tell me, I take it you still think that competition in this area is pretty inadequate?
Absolutely, yes.
Yeah.
In the area of SME lending, absolutely, yes.
Yeah.
I think there's improvements, but there's a long way to go.
Right. And do you... but I take it also that... Would you also share my view that competition is not antithetical to safety? Competition and safety sometimes go together because you have a, as it were, a more spread out, more resilient market. You're not quite as,
Yes, I'd add a third, which is transparency. I think if everyone knows what's going on, they know what's on offer, they know where they're being given a bad deal, and they know where they can get a good deal, that also keeps things safe and is as good as regulation in many ways.
So the model we evolved was an oligopoly banking system which was supposed to be safe, but actually turned out to be not at all safe.
I completely agree.
And actually rather poor on service.
Absolutely.
Yes, thank you. How do you feel about, I mean, obviously it's a source of great concern to this committee that SME lending has been so subdued. How would you evaluate the Bank of England's performance on that? Because obviously they have ultimate responsibility for the regulation of the system.
I think that inevitably, following the financial crisis and the regulatory changes, the new capital requirements and so on, it was completely inevitable that banks couldn't be in a position to just carry on lending as if nothing had happened. But equally, of course, as we know, there's a huge raft of SMEs. It's something like 80% of SMEs aren't borrowing for whatever reason. So actually, SME lending has been very poor on a net basis. On a gross basis, it has been growing. On a net basis, reducing ever since 2008, 2009. And that is a function of a huge number of things. So I don't think it would be right to say that it's simply that the banks have not made finance available. Equally, there's a question to be asked about why SMEs aren't borrowing, and that has, I presume, quite a bit to do with confidence.
I suppose I asked the question whether you don't think the Bank of England was very slow to pick up the issue of SME lending and to try to think about how it could support that or boost it.
Yes, I think, as Will recall at the time, we were urging the Bank of England to look at SME lending, and they were saying it wasn't in their remit to pick sectors. So that, the Funding for Lending scheme came in as a government solution to facilitate the finance being made available to the banks, and the carrot was the more you lend to SMEs, the more funding you'll get. So in other words, what the government tried to do was to facilitate that lending, but the Bank of England, I think, still remains adamant that they are not there to pick sectors.
But the second tier funding lending scheme, the point where the bank actually did start to accept that it was responsible in the SME area and was specifically trying to target small and medium-sized enterprises, that's been pretty slow and pretty inefficient, hasn't it? Pretty ineffective.
I think it's been slow. I think that the Funding for Lending scheme has been rather successful. There is evidence
no, but
that
in the
it's kept
SME
costs
sector particularly.
I think that the FSB has said that they believe that the Funding for Lending scheme has kept costs of lending to small businesses down. And there is evidence, as I say, that gross lending has grown. So I would agree with you that Bank of England was slow, but I think that subsequent to that, I think that we've had a massive shock to the system. Banks are still trying to sort out their balance sheets. So there have been all sorts of headwinds against an improvement in the lending environment that's not just about slow to act regulators.
But just to be clear, and would you be comfortable, obviously we heard from the FCA earlier, but you'd be comfortable, would you, and you would support a reduction in capital requirements, easier and more cost-effective access to the Funding for Lending scheme for these challenger banks?
I wouldn't necessarily say I'd go for smaller capital requirements.
Right.
I think that is very rightly, properly a regulatory issue that is about safe lending. But in terms of access to funding for lending, in terms of access to funding for challenger banks to be able to lend to SMEs, I think is absolutely critical, as is data sharing, referrals access and so on, to enable them to actually access who wants to borrow.
And do you think the government ought to consider a specific further scheme which is actually designed to support challenger banks in the process? I mean, you've now got a raft starting to get going. You might be able to get 5, 10, 15 of these banks to draw on specific funding arrangements which would allow them a more rapid entry into the market.
It's not clear to me. I mean, it's a very interesting idea. It's not clear to me that you'd need a specifically challenger bank targeted measure. As I tried to outline in my opening remarks, there's a huge raft of opportunities that are there specifically to support getting challenger banks to be able to identify where the potential demand is for loans through postcodes, through credit referrals, through direct referrals and so on. So I think those kind of measures, those are specifically targeted to support challenger banks. And it's just not clear to me that they need some other specifically financial incentive.
But you might consider
but it's worth considering.
If the other schemes weren't, as it were, panning out as quickly, or as FLS
considering.
gets withdrawn, then you might consider that.
Definitely worth
Good, thank you
considering.
very much. Thank you, John.
Very helpful, interesting changes. Mark
Yes.
Garnier,
Can I
you
just,
want to add
Ms.
something?
has a
Ms.
comment to
Sorry, I
make.
was going to add on that. Because I think it's a very good point, and actually, as the Minister says, we're always open to new ideas. But I think also, as the Minister has said, I'll try and add a third before we through. But also, as the Minister said, this is one piece in a jigsaw, and we've mentioned the transparency, we've mentioned the specific schemes, but it's also the awareness among SMEs themselves of what the schemes are there and what they're doing. And we know, and what we're continually trying to do, is to raise awareness of these schemes. One of the latest SME finance surveys suggested that about 22% of SMEs who were borrowing or interested in borrowing thought that the FLS had made it more likely that they would go and try and do that borrowing. Now, as with the FLS, however, there's lots of schemes, we need to make sure that SMEs know what's out there, because part of these schemes is aiming at the lender and part of it is aiming at the confidence of the borrower. So it's both of those things. So I think we need the credit register, we need lots of other things to bring all these pieces together.
I've done a straw poll on the local Chamber of Commerce, and awareness, even among people you'd expect to know, is we've got a plethora of schemes.
Yeah, absolutely.
And
which is also where the business bank may be able to help.
Mark Gunny.
Can I add my congratulations on your moving sideways, if you like, from the Treasury Committee to the Treasury itself? It's a promotion. Can I just carry on one point of Mr. Norman's, and this is some sort of funding for the challenger banks. And the British Bankers Association, and I know one or two other people have also mentioned this, is that one of the problems that a challenger bank has is they can't compete with the bigger banks on the same basis in terms of their funding costs. So the bigger banks, where there is still this implicit guarantee, fund cheaper than the smaller banks can do. One or two people have suggested that some sort of system whereby the banks could have those smaller banks could have available funding at the same price as the bigger banks would be very helpful for competition. Do you agree that would help, or do you think it's a bit of a red herring?
No, I certainly don't think it's a red herring. I guess I'm simply saying that it's not clear at the moment that the evidence is that challenger banks are failing to lend to SMEs on the grounds of their funding cost. It seems to me that the issues are more structural around knowledge. If I'm a sole trader and I've never heard of, take Handelsbank, for example, if I've never heard of them, I won't think to go and ask them for money. So it's those issues, as opposed to when I do find them, they then can't afford to lend to me. But I absolutely take that on board and will go away and think about it.
One of the issues that sort of slightly perplexed me about sort of bringing more competition into the banking market has been that where you tend to get a lot of competition amongst banks is aiming for that very sort of simple type of loan where you've got sort of pretty very, very decent asset, maybe a factory or something, backing a loan. And it's actually that other area of the SME market that's proven to be much more of a problem for banks. So where you have sort of something sort of slightly more esoteric. So the property rights on a game where you wanted to borrow money in order to try and market that. How do you see competition in the banking market being able to direct itself at that much more complex area of the SME lending rather than the traditional area?
Well, again, this is again an argument for competition and diversity. And, for example, the asset leasing organisations are doing a dramatic increase in their loans to businesses. Some phenomenal some 13% increase in asset-backed financing and leasing financing. So there are specialist organisations who are looking at more complex areas of business lending. And of course, more competition will lead to different expertise in different areas. I mean, I think one quite interesting initiative is Santander have just set up an arrangement with the Funding Circle, which is a peer-to-peer group, where they'll mutually refer to each other. So if Santander turns someone down because of complexity or because it doesn't meet their credit scoring targets or whatever, they will refer it to the Funding Circle, which may have individuals who've got a bit of spare cash who would be interested in that loan. So I think that all that competition and diversity is intended to promote a diverse range of availability of types of finance as well as just different lenders. And
are you happy that the diversity element of that is working as well as you would have hoped?
No, I don't think it is. I think we're still at an early stage. I think the continual net reductions in lending to SMEs is very regrettable, and I think the day that net lending is up will be a day for celebration. But of course, equally, that's got to do with confidence confidence in the economy, it's got to do with businesses wanting to borrow and whether they want to just borrow a straightforward term loan or a short-term loan or an overdraft or asset-based financing. It is all a function of supply and demand. So we sort of need we need the economy to be growing as it is, and we need lots more competition and diversity, and we're getting there. And so I think we're all heading in the right direction, but there's a long way to go still.
Any sort of significant barriers to entry to diversity that you can think of?
No, I think the chairman's point about regulation of new sources of funding, I think that's important, that the regulators stay on top of any new sort of emerging area that could become problematic. But otherwise, what the government wants to do is to encourage new innovation. Just literally a couple of weeks ago, I was speaking at the 50th anniversary of the credit union movement. Now they, of course, very long-standing group of organisations, but doing a fantastic job and a diverse source of funding, which encourages people to save as well as to borrow. So, encouraging those types of diverse organisations as well is very important in the overall mix.
My final question, if I may, Chairman. There's a lot of talk about regional banks, local banks, that kind of stuff. Do you think this is something where the regulators should try to create, if you like, legislative space in order for regional banks to develop? Or do you think this is something that the market should try and develop in its own way as part of that kind of general mix of new types of banks coming into the place?
Well, as you know, Mr. Garnier, I am a big believer in the free markets making its decision, and I think we're already seeing that regional banking is becoming more attractive. We're seeing some of the existing players who are basing themselves in the regions, like Virgin Money, TSB with their new IPO, and so on, and that's to be encouraged and I think facilitated rather than sort of state or regulatory engineered.
Fantastic. Thank you very much. Thank you.
Minister. You'll have to put up with this, I'm
yes,
afraid,
I know.
for another couple of hours.
I'm trying not to take it as an insult.
Welcome back. There is some of this is not for government, some of it's for banks or for lenders and so on, or maybe for regulators. But there is a part of this that really is affected by government, which is the tax treatment of different forms of finance. And there's been a long debate about the different tax treatment of debt and equity. And the Banking Commission looked at this quite a lot. I don't think it's a secret to say that former Chancellor Lord Lawson was particularly interested in this area when we did the Banking Commission's work. Can you tell us anything about the Treasury's thinking on this debate? Because the argument is that the traditional model of financing business through debt is encouraged by the way that these things are taxed at the moment.
Yes, I'm very aware of that argument, and I'm sort of slightly cautious because this sort of treads very firmly into the Exchequer Secretary's portfolio, and it's not something that I'm very up to speed on where the government's thinking is. I share your interest in the unintended consequences of the sort of favourable treatment of debt over equity from a tax perspective, but at the same time I do very firmly believe that the mix of the actions taken by the government, by the banks themselves, by the international regulation is actually changing in itself the incentives vis-a-vis equity and debt, and is actually encouraging much more capital. We're looking, as you know, at bail-inable bonds, and we're looking at different means of achieving greater safety in the banking system. So I think that the tax system will, in due course, be another way of looking at this, but I don't have any sort of specific pointers to give that we're looking at something very specific. I don't know if Ms Cottrell wants to add anything to that, or Mr Pocklington, no.
Officials must have had a run around the course on this. Neither of you like to elaborate?
This is an issue that has come up time and again over
decades, I think. And periodically it does reappear. There are arguments for it, there are arguments against it, against equalising the treatment. One of the great challenges is how would you transition from a world where you have debt having a favourable tax treatment to a world where it doesn't, and that would create all sorts of challenges. It's an issue that periodically comes up.
Let me ask you this from a different angle then. Do you think that the debate about this might be given greater urgency by the parallel but related debate over the weaknesses of the corporation tax model as it stands at the moment, whereby multinationals in particular appear to be able to sort of shift things around? Your boss, the Chancellor, has made a big issue of this at G8 meetings and so on. If corporation tax is a tax which looks at a tax on profits, which seems to have weaknesses in terms of people being able to avoid it, might looking at debt and equity be given greater urgency by that debate?
I'm struggling to see why the difference by focusing on equity you would change
well,
the
if you've
issue.
got a lot of debt payments every year, it will reduce your headline corporate.
Yes, but that's not affected by the sort of onshore offshore point that you're making about companies booking profits elsewhere in a lower tax regime. I do take the point that debt's offsettable against tax, and it is definitely something that the government looks at from time to time, but not in my department. I'm very wary of straying into that.
Okay, I think I will stop there because I don't think we're going to
George Moody.
Welcome, Minister. The Treasury's gain is our loss. You're very much in favour of competition. This is one answer I won't like, but you're very much happy with and keen on competition. I think that's a good thing. Why do we only have one regulator? When you see their performance this morning, it is not in my remit. People are being hurt, it's in their field, but they've got some narrow point that they seem pleased that it's not in their remit. It takes you back to Lord King when the crisis broke. Nothing to do with me, it was the FSA.
Yeah.
We were in the States, and you wouldn't have this situation arise in the States, because if one regulator doesn't go in, the state doesn't go in, the Fed goes in, or the Attorney General goes in, there's nowhere to hide in the States. But here, just you have a very cosy, happy, the Ombudsman, I don't want any more powers. Don't you think we could do with more competition?
I'm not sure.
No, I know you'd say no, but it's worth thinking about.
No. Mr. Baker will be delighted with that idea. I think, in principle, I think that that competition in regulation is, as in all areas, advantageous in the sense of then you do get regulators falling over each other to take up an issue. The downside is, of course, lack of certainty to the industry. I think in your previous hearing, one of the very interesting things that came up was the gentleman from FOS who was saying that unlike in lots of other retail sectors, banking appears to require a lot of regulation and punishment in order to make them behave at least normally. And I think that actually the issue that we have in the UK is around a culture that got out of hand and is now righting itself. And competition in the delivery of service is absolutely vital. But I think where the regulation is concerned, you need certainty of regulation, you need fairness, and you do need perimeters. And I noted Lord Thursow's points about the definition of sophistication, and completely accept, as he says, that it's the beauty's in the eyes of the beholder. Sophisticated is what you make of it. But and so there are always going to be grey areas. And I would also agree with you that there must be times where the regulator should say, well, okay, it's not technically our area, but we're going to comment anyway. I completely accept that that would be a legitimate thing for them to do. But my underlying thesis here is that we live in a sort of Western democratic capitalist society where we actually need wealth generation in order to pay for the public services we all want. So what we can't do is to regulate things to the point where they can no longer be profitable and successful organisations. So I think that there's always going to be a fine balance. That's probably not the answer you want to hear, but I wouldn't therefore advocate pure competition in regulation. And I guess the other thing I would say is, with the tripartite system, that was the problem, was a lack of accountability. And whilst you're saying there's now a lack of accountability because they won't go outside their remit, at least there is accountability in that there aren't three different people looking at bank regulation, new bank approvals, market misconduct and so on. In that sense, each of those regulators is entirely accountable for their area, and that's a very good thing.
But that was what the problem was, or seemed to be, when the recession came, that the FSA said this is our remit, the bank said this is our remit, and there was stuff in the middle that they were content to just let go because it was nothing to do with Aegon. But you've obviously read the evidence we've received by the sound of it, or you've read some of it. I could read you, I've said some stuff today, but can you defend the regulators not being willing to actually accept there was a grave problem that was affecting a vital part of the economy because it was not in their remit?
Can you just expand on exactly what that part of the economy was? Sorry,
the small businesses.
So actually the small business lending, why they didn't intervene more to force banks to lend to SMEs?
If I'd plead with you to get Bergs in and bully banks and sit with your officials and go through and question them. Yeah. We've not had the opportunity to question Berg, but I could go through a whole list of what they do and why they do it. They are doing it to get their hands on the capital that's involved in it, and they do some dreadful, dreadful things. Yeah. If I just give you an example, when John McFall was here in the last administration, we took on consumer rights, and we had a real battle over the 5 or so years with the banks, but I think we got somewhere. What's crying out now is for someone to look after small businesses' rights, because they can do it so easily. A drive-past valuation on your property, call you in, loan to value, it's out. Now, if you consider a mortgage goes through in a recession, goes into negative equity, you don't get a bank. You'd string them up if they called the mortgage in because it was loan to value deficient. But they do it for small businesses, and they finish them off, or they bring them in, they change all the terms, they put them into this corner of the bank, that corner of the bank, all paying fees. And they've done that. And the Berg's report on their experiences and their cases say it's not limited to RBS, Barclays, HSBC, Lloyds. They're all at it, destroying viable businesses because they want to get their hands-on capital.
Yeah, I think my own experience, I've got a lot of businesses, obviously in my constituency near Silverstone, we've got lots of sort of high-tech performance engineering businesses, and I have had some of my businesses say to me that it's not so much the availability of funding or the assessment as what happens once you've got the loan, and they sort of appear to just kind of help themselves and charge you these huge renewal fees and so on. And I've taken up a lot of these issues, and certainly I do have a residual concern about the way that banks handle internally the complaints procedures. And I do, just in my couple of months in the job, I've answered a lot of correspondence from colleagues who've got individual grievances from businesses, not about, obviously no one's ever going to legislate to say, right, you bank have to lend to this trader, because ultimately, if the loan goes bad, then it's my fault because I made you lend them. So we can't obviously do anything about that, but what we can do is look more carefully at how the banks manage those complaints procedures. And certainly as an MP myself, I've had issues with that. I know I've heard colleagues on the Treasury Committee talk about that too. And I do think that that's an area we could look at. Having said all of that, you see, that is within the regulator's remit. It's not true to say that they can't look at banks' internal complaints procedures because they regulate the banks. So, I mean, I would just simply disagree that the regulator can say, oh, well, that's not our problem, because I think that is within their remit to do that.
That's very fair. But if we were to list in the evidence in our report all the areas where evidence has been given that the banks have behaved badly, and I could list them for you here, I've got one of the reports here, would you be willing to look at it and have your officials run down those and tick off those that can and should be dealt with the regulator and ask the regulator why they're not doing it? And then, secondly, those that are not ticked off, actually take an urgent look at legislation?
Certainly, if there are specific examples that you wanted my department to look at, we would certainly do that. I wouldn't I wouldn't predict the result of it, but certainly would be very happy to look at them.
Minister, you did say that you thought that there were areas where they could and should, well, I won't say should, could be looking at it, were able to, within their perimeter. Now, if we listed areas where evidence has been given to us and your officials say, well, they can do, then I presume the Treasury would be willing to ask the FCA formally why on earth they're not taking action or have not taken action. But those areas where your officials say, well, they're right, they don't have the power, surely you'd certainly in the Treasury, not you, and I understand the position I may be putting you in, but the Treasury should be looking to see. You see, last week we had the Governor of the Bank of England in, and I asked him about exports and about rebalancing the economy, and he was all over the place. Small businesses are failing, exports are failing, the sector's not growing as fast as you would wish. And this is supposed to be rebalancing. And here's a vital part of that rebalancing being sabotaged by banks. And surely they can't get away with this.
Yeah, well, you see, I'll happily look at anything you want to send me, Mr. Moody, and go through it very carefully. But as I said at the start, I'm an absolute believer in free enterprise. And I think there's a lot going on in the SME world, including SMEs thinking, I don't want to export at the moment because the economy doesn't look good enough to me. There's all sorts of reasons. It's very difficult to pin down exactly why things don't happen. But from in answer to your specific question, if you wanted to send me some examples,
well, the committee,
if the committee wanted to send some examples, and there was a case that the regulator could be looking at those cases, then of course the Treasury would certainly pass them on.
Well, the consumer interest is right at the heart of what this
exactly
is trying to achieve and has been for years. And of course, we did the checks inquiry where the banks, on a quiet day, it seemed, were intending effectively to withdraw checks. And we find all sorts of similar practices going on in the SME market as part of this inquiry. All I'll say with respect to that is we are intending to report as a committee. I don't know what we're going to report, but it's useful having you in the Treasury to take a look at it when we do. John Thurston.
Thank you, Chairman. Minister. I'm enjoying the delicious irony of the fact that you and I persuaded the committee to kick this report off and you're now answering for the government on the other side. May I say that as a former gamekeeper you make an excellent poacher.
I'm hoping I'm consistent, actually. Internally consistent is my aim.
Can I want to just ask you about some of the on the TBL side, as I'm sure you're expecting. Why has the Treasury so far refused to engage on that issue or have anything to deal with it?
Well, I'm not aware that the Treasury's refused to engage in the issue. I think the point is that that there won't be retrospective legislation on issues beyond those that are the sale of regulated products that have been missold. So the interest rate hedging products, where they have been found to be missold and they are therefore regulated by the FCA, are part of that inquiry. And I know that the committee's been impatient with the slowness of the kick-off, but I hope the committee is now happy that things have speeded up and a lot of customer redress has been made, and the process is now well underway and drawing some conclusions.
When did the Treasury first become aware of the TBL problem?
Ms. Cottrell, can you?
I don't know precisely, but it would. I mean, you've mentioned the letter which Martin Wheatley wrote to the then FST Greg Clark, and certainly that focused on that area. I can't tell you if it was before that or if that was there, but it would be around that time.
What response has the Treasury made to Martin Wheatley? What have they written in response to his letters and concerns?
I'm not aware, and this is just from memory, I'm not aware if he replied to Martin's letter as such. Certainly he would have had frequent meetings with the then FST, so it would have been discussed there in the context of TBL.
So the FCA raised what they considered to be a pretty big problem, which the Treasury initially was not going to release under freedom of information, but this committee got that correspondence. And here we are a year and a half on and there's no response. I mean, I would suggest to you that that does not show a particular willingness on the part of the Treasury to engage or deal with what an awful lot of people think is a pretty serious issue.
I mean, the specific issue of the NAB loans, as you know, were brought voluntarily into the FCA scheme, which was the issue that, as far as I'm aware, Martin was talking with the then FST on.
Well, the point that Martin Wheatley was making in his letter was that it appeared that these products were not regulated and therefore they did not have jurisdiction. Now, there is first question, do you buy into that legal advice? Because there is opposing legal advice that's been given by eminent counsel that says it is regulated.
I would accept the FCA.
Has the Treasury got its own legal advice on that? Does the Treasury share the point of view that this is not regulated?
Yes.
Does the Treasury believe it should be regulated?
That would be a question for ministers if they wish to change it, but at the moment, in terms of the scope, it doesn't come into the FCA scope.
In other words, is this an accident that it's not regulated, or is it on purpose?
My understanding of it is that the business lending element of those TBLs is not regulated, and that there isn't an appetite
Forgive
from
me, Minister,
the industry.
I'm going to have to that's not the point.
Yeah.
The point is that in all the evidence we've received, a TBL looks like a duck, quacks like a duck, paddles like a duck, and therefore, for our purposes, it is a duck.
Yes.
The fact that there is a technical difference, that the way that the contract for difference is written may exclude it from being under the auspices of the SCA, is one that has only just come to light, or more recently come to light. I think most of us would have thought it was regulated. So the question, therefore, is, I know the historic position as it's seen. Is that intentional or unintentional?
My problem is not knowing the historic intention. What I can say is that business lending shouldn't, in my opinion, fall under regulation. Interest rate hedging products should fall under legislation, and the extent to which you combine one with the other and it walks like a duck and quacks like a duck, then I would say you shouldn't combine them. You should sell them separately, or, as is, I understand it now, the case, you should make extremely clear in words of one syllable exactly what the implications are if you repay that loan early.
But can I help you? My understanding is that this is an entirely unintended consequence, that nobody actually thought this product particularly existed. And having discovered the fact that it isn't regulated is something of a complete accident. Martin Wheatley, in the meeting I referred to with him, with Chris Woolard last week, said they would very much like to regulate. Their position is they think it should be regulated and they would like to regulate. Chris, on the record, did not quite give the same, but he came very close, given that it was evidence. But I mean, you can talk to Martin Wheatley, and I think you'll find that they'd be very keen to see this properly regulated.
Mm-hmm.
So at the very least, going forward, could we not get this situation resolved so it's clear that it is that if you do something that it ought to be regulated, it will be regulated?
See, and I'm obviously not making myself clear. I think that a business loan shouldn't be regulated.
I'm happy with that.
But if you turn it into a term business loan by fixing the interest rate, then the only way to make the product itself, so the tailored business loan or whatever you want to call it, the only way to make it regulatable is by splitting out the swap from the loan. And so what you would be doing then is you would be saying that the small business who wants a 3-month, 6-month loan has to actually have a short-term loan with a 3 or 6 month interest rate swap attached in order that the interest rate swap becomes regulated. And so then the question is that actually extraordinarily complicating things, both to the bank because it's having to individually hedge every single loan it makes, and to the customer, very importantly, because they're like, oh, I don't really know if I want to buy an interest rate swap, what on earth's that? So that, I think, is the problem. And in fact, I was talking to officials about this last night, is unless you were to stray into the territory of saying, right, well, there are certain types of business loan that will in future be regulated, which, as I understand it, consultation with the industry suggests that the industry trade bodies don't want business lending.
The point really here is nobody's arguing that. Nobody wants to regulate loans. That's not the point. The point is that the contracts, and we have the contracts, and can I refer you to the evidence Lawrence Beer, amongst other, gave us, and your officials, I'm sure, could do a synopsis of it. The fact is, you have a contract which lays off the entire risk of the swap that the bank has taken to book out their position. That entire consequence, the loss of that, is placed into the loan by way of the contractual paragraphs in the loan relating to the fixed element. And the problem is it's not 6 months and 20,000, it's 750 million and 10 years.
Yeah.
And that's where we have the difficulty. So the two things are, people are being sold a product which they're told is a fixed rate loan, and as you and I know, there's no such thing. What they don't know and don't understand is the fine print, and it's not explained to them.
Yeah.
Now that, to me, should be regulated. The FCA think it should be regulated.
Yeah.
The law appears not to regulate it. Will we do something about it?
Okay, so just to come back once more on a point of clarity, because of course what happens is if a bank's making, say, 20 £500,000 loans for 6 months, then it may well aggregate the sum that it's lent out and hedge the entire lot on its book.
Aggregated swap.
And it may be that because it's already got other swaps on its book, that it in fact doesn't regulate, that it in fact doesn't hedge it at all because it's already overhedged. So it may simply allay a overly hedged position on their book. So my question for you is, how would you split out the consequences for the bank's book? Because obviously banks, they might sort of sort out to perfection their hedge once a week. They might not do it on a loan-by-loan basis or even an hourly or even a daily basis. So how would you actually allocate, in terms of regulation, what are you regulating? Their entire swaps book or the piece of it that relates to that loan, and how do they know which piece that is?
You missed the point. I am completely uninterested in what the banks do. What I am interested in is the impact on the consumer, and that can be found in the contract between the bank and the consumer. And the kick-in is whether or not the negative or positive impacts are felt by the consumer. In other words, does the bank lay off its risk in the contract so the consumer pays the break cost or not? That's all that really you need as a definition.
So effectively what you're looking for is for the FCA to regulate the breakage costs of a term loan?
No, that's oversimplifying it. It is where a loan is given such that it is not a simple fixed interest rate, and there is a series of clauses in the contract which tie it to whatever swapping mechanism is behind it, and therefore the small business ends up unawares, because it's been missold and he doesn't understand this, ends up unaware of the consequences and suffers loss as a result. And that's the core of the issue. And I happily come and see you. Might be easier to talk
think
about
this is kind of a several
maybe I can
cups
come
of
and meet
coffee,
with you on that, because I want to quickly move on. But the key point here is the FCA have told me privately, and Chris have said quite clearly when he was here, that they are far from being averse to regulating this. They believe it should be regulated properly, and that it's up for us in Parliament to give them that. So that's the second thing was on the FOS, and hopefully I know you heard the evidence, which is that broadly my reading, and this is a terrible paraphrase of a lot of evidence, but I'm forced by time to do it, is a view that for small businesses we need to look at both how much, the scale at which they can intervene and the size of the award they can make, which seems to be, I think we're all agreed on. And so my question is, do you accept that, and what will government do about it?
Well, as I understand it, FOS are consulting now and will be reporting on that by the end of this year. Is that
yes,
right?
Yes, the FCA will review in the autumn.
Yeah.
And how will government give effect to either of the propositions I'm putting forward, which is FCA regulation or FOS?
To FOS increasing their remit and scale of business, is that secondary or primary legislation?
I don't know, but certainly I think in relation to the point, if the FCA were to come and say this is the way we would recommend we go forward with FOS, then we would certainly consider that.
Can I commend to you a possibility, which is that number one in the Queen's speech is a small business enterprise and employment bill, and the purpose of which I suspect will be the long title, is to build a stronger economy by supporting small businesses as they compete and ensure that they aren't disadvantaged by those that don't play by the rules. Sounds good. And the main elements of the bill are two, and the first bullet point says make it easier for small businesses to access finance, and that therefore would be an excellent vehicle to actually deal with all of those, and we can do it in a short order.
In very short order. I completely agree with you.
On
George,
which happy note, I conclude.
Thank you,
Minister.
George Moody has a rejoinder.
You see, I hate to be in a minority at one, but I feel I am in terms of the phrase everybody is against regulating commercial lending. I don't think that I'm in the place, or you're in the place, or anyone in this building's in the place where we can tell banks who to lend to. They take the commercial decision.
Yeah.
But once they've taken a commercial decision, the contract they enter into with the individual should be clear, should not be missold, should the consequences of actions all throughout that contract must be understood by the borrower. And what is happening now, and we get waylaid by the technical problem of swaps. What is happening to property companies, hoteliers? The banks just decide. There's a case in one of the papers where the fella didn't pay his paper bill for 2 weeks. The bank heard about it and used that as the opportunity to tear up the contract and renegotiate. There's a case where somebody goes in, and you can imagine it, Minister, they get £1 million loan, right, in the contract. In 6 months' time, they'll get a second £1 million. So they go in, they spend the money, and then the bank blithely turn around and say, no, we're not giving you the second £1 million. Now, I refuse to believe that we would allow that to happen to a consumer. The bank is in the strong position, can negotiate the terms. They do negotiate the terms. The person agrees them, and then the bank unilaterally changes the terms within the term of the loan without good reason. Now, that's where we're pleading for the regulators to come in, as they would with any other contract, to defend the weaker party. Now, does that not stir you to start questioning? It is not the actual lending. It is once you've lent and you're the bank and you know the consequences, you've looked, you've got all the experts, you sign that contract. Only with good reason and in line with the contract should you be able to alter that contract.
Yeah. And in terms of your example, I completely agree with you. Banks absolutely should not be just moving goalposts, all things being equal. And it's absolutely right that they are regulated by their regulators, who are there and supposed to ensure that they treat their customers fairly, that they have a properly instituted
That's all we're
complaints
asking
procedure. And on that, I completely agree with
But
you.
these characters who were here before you see it. The fact that commercial lending, we don't regulate that. They turn their back on what's happening to good citizens who are trying to earn a living and say, oh, we don't do it. We are not interfering with the bank's right to lend. It is the contract they enter into must be fair, honest and clear.
I think what I heard them say is that they would look at trends, they wouldn't look at an individual case. They would look at to see that a bank was properly implementing its own complaints procedure and that there weren't systematic failures to treat customers fairly. I think that's certainly what I heard them say, which I think is right. I mean, it's very difficult for any one of us to say, well, that was unfair treatment and that was not deserved. But at an aggregate level, it's entirely right that those banks are regulated entities. They should have systems. There should be the means by which to appeal where they're not being fairly treated. But then equally, there is another side of this argument, which is that for the bigger businesses, for those bigger businesses, we don't want to just be a nanny state and make them not suffer the consequences of their own decisions either. So to interfere in the sort of commercial arrangements is a mistake, but the regulators absolutely need to ensure that they've got proper complaints procedures and that they implement them fairly.
My colleagues are reluctant to let you go. John first has got a rejoinder.
One point I don't ask you to answer, but following on from what George said, nobody is asking the government or anybody else to regulate a simple loan product. We are asking for the regulation of the conduct of the people engaged in the selling and managing of it. That's where we agree, is that nobody wants to regulate lending per se, but if lending is sold inappropriately, and the problem is if you ask the FCA, their definition of what they can regulate is based on is it a regulated product, and that's the lacuna at the moment.
Yeah, that's a very interesting point. Yes, thank you. Definitely.
You can hear the frustration,
yes,
Minister, coming out of a good number of colleagues, and I have seen some of these cases in my constituency, and some of them are very bad, and something needs to be done. We shall be reporting in due course, and no doubt then we will have exchanges which we should consider this one just the first of many. It may be more awkward next time when we have firm recommendations on the table, but in the meantime, welcome to your new job. You've given lucid answers, just as you always asked lucid questions, and we're very grateful to you for your efforts.
Thanks very much.
That is now this afternoon.
Thank you.
Order.